You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done for professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 13th day of August, 2019. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad you're right here, right now. If you can't see the chart I have up, it's because I don't have a chart up, and I'm going to put a chart up. So, well, there you go, a chart. S&P 500 Emini Futures, that happens to be a 30-minute chart. If you can't see the chart, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day. Now, on the days you're out of the office, away from your desktop, you can point any internet-connected browser to youtube.com/CFRN/live. There you will find a live, real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. And most of you here have already taken a trial with us. Some of you may be in the midst of a trial as I speak. I know for sure most of you who've taken the trial have taken the live training room trial. Some of you have also taken a trial of our Emini alert service, Logic 247. We just completed our first year. Happy to report we maintained our benchmark goal of no more than 20% of alerts stopping out, not just for a week or a month, but for the entire year. Our first week of the second year, which completed last Friday, we reached another milestone. We had 100 alerts for the week last week. 18% of those were stopped out. A typical week with Logic 247 brings 45 to 60 alerts. However, the increased volatility that we're seeing because of China, Iran, and the Fed have created a fertile trading environment that in the past we could only dream of. Our sentiment has never been more bullish. Trading futures as opposed to stocks and other things that you might get involved with. Trading futures means you don't have to worry if the next tick is going to be up or down. There's no last tick rules. There's nothing to hamper you from being long or short in any given session. In fact, as we had examples of yesterday when I went through the Concierge Trade Alerts, there are often opportunities for two-sided action, to borrow a phrase from our friend Mike Reed. Some sessions will be long part of the session and short as well. Unlike stocks where you fall in love with the stock, with the story, with the hope, with the promise, with futures, it's a different story. And if you haven't experienced that yet, and if futures just sounds daunting, really complicated, I assure you it isn't. Options are above my pay grade, so to speak. I understand the principle, but it's pretty complicated. And there's so many things to factor in, like time decay and all the others. It's all pretty much Greek to me. I have great respect for those who do understand it and do it well. Michael has a good handle on options. Bert has a great handle on options. I don't. Again, if I chose to pursue it, I think I could figure it all out and do okay. But I'm happy to just stay focused where I am right here, right now. And that's on futures. In particular, the Emini Futures. Now, as long as the river's flowing with futures, and right now, I guess you could say, looking at this chart, it's overflowing, which is a good thing. There's an abundant harvest of low-hanging fruit just waiting for the trader who has a definable edge. And that's what CFRN and Logic 247, our methodology, our indicators, everything that we do is designed to help give you a definable edge. Too many traders, profitable traders, spend up to 80% of their time just looking for the next high probability trade setup. Whatever edge that they might have had is quickly eroded by time decay and frustration. Now, 80% is a big number. If you do the math, that's 4 days out of a 5-day week. Now, their problem, which is obvious, can become your greatest blessing because CFRN traders enjoy a steady stream of high probability trade opportunities around the clock from Sunday evening at 6 p.m. Eastern right up through Friday afternoon at 5 p.m. Eastern. As a result, CFRN traders are able to spend more time trading and less time looking. Current market conditions, while ripe for the harvest, have an added element I think you should be aware of, and that is what we see right now is probably going to stay this way, at least for a while. From interest rates to trade tariffs, geopolitical tension, and of course, the upcoming presidential election cycle all point to not only continued volatility, but also a dramatic increase in high probability trade opportunities. Our traders, myself included, can scarcely wait for the markets to reopen every evening. Yes, evening. The new daily session does not begin at 9:30 a.m. Eastern. That's for those who sleep in. The new session begins every night at 6 p.m. Eastern. Today's Tuesday, so the Wednesday session will begin tonight at 6 p.m. Eastern. Now, the Globex session was once considered a shadow market. There was relatively light volume compared to the day session, and major market moves rarely ever began or ended during the Globex session. That's just not true anymore. Globex allows traders an opportunity to trade the big names, S&P 500, the Dow, NASDAQ, Russell, gold, crude, euro, British pound, grains, and more. With ever-increasing volume, it's also becoming the place where many major market moves do begin and do end. As you saw on your trial, if you've taken the Logic 247 trial, our alerts are simple and even simpler to follow. You don't need any advanced training. With 24/7 service, our alerts follow the sun, so no matter where you are, when you're ready to trade, Logic 247 stands ready to deliver opportunity to you, to your desktop, to your cell phone, even to your tablet, any internet-connected device. We are constantly raising the bar, pushing the envelope, and delivering high-probability trade opportunities to traders around the world, just like you. That's how we roll. Now, the most talented traders, the ones we read about, hear about, typically work for hedge funds. Now, they have an edge that retail traders, folks like you and I, could only dream of. Now, that professional trader's edge is this. They have in-house analysts feeding them high probability trading opportunities. Must be nice, right? The only problem is a good analyst has a starting salary of about $175,000 a year, which puts having your own analyst a bit out of the reach for most retail traders, especially those just starting out. Now you can have that same professional edge. As a CFRN trader, you can now focus your time and energy doing what you do best, trading, not looking. A steady flow of pre-vetted, high-probability trade opportunities are waiting for you every time you sit down to trade. When you're done trading, you switch it off. What happens is while you're away, sleeping, just doing life, spending time with your family, whatever's important to you, Logic 247 is still at work, and alerts are building up in the pipeline. Now, we know that important prices in important areas are almost always tested. So when you turn the service back on in the morning, all of the alerts that have built up in the pipeline, that's your inventory. You take a quick look at that, see what is triggered and what hasn't triggered. If it's already triggered, now you'll be waiting for the second or third trigger. If it hasn't triggered, you'll be waiting for that trigger. And as you're sorting through that workable inventory, new alerts will probably come dribbling out the end of the pipeline. All the stress, the frustration, the aggravation of always being on the hunt, desperately looking for just one rock-solid, high-probability trading opportunity to get you through the day, all of that can now be a thing of the past. In a world ripe with opportunity, can you afford to spend one more day looking when you should be trading. Look at the chart I have up right now, S&P. As most of us slept, Concierge Trade Alerts were hard at work. We had an alert to consider being long the S&P 500 E-mini Futures at 29.05. We've put in a swing high so far at 29.44 and a quarter, 39.40 points, 40 points on the S&P 500 at $50 per point. That's $2,000 per contract traded. For a 10 contract trader, the math says that would be, well, you do the math. Now that's the reality of this market. That's the reality of futures. What I just shared with you, that's a function of math. So keep the two separate, but realize that they work together hand in hand. Now, yes, we did shoot up 39.40 points after this trigger. Getting out at a swing high or swing low can be difficult because we don't know that it's a swing high or a swing low until after the fact. Our traders could have handled this one of two different ways. We had a last week weekly trading zone right here at 29.35/36. Of course, I don't typically hand out the zones. Seems like I'm saying this every week, but it's because I'm eager for you to see these because it just makes trading so much simpler. Not easy. There's no easy button in trading, but it definitely makes it simpler. This week, we have a weekly trading zone at 29.37/38. Now, we anticipate a weekly trading zone when we approach it from below. We expect that to be good resistance until it isn't. So we had a lot of momentum on this move. We spiked it a bit, pulled back, and as you can see, we're consolidating right below that weekly trading zone. Another thing that our traders can do, as opposed to, trying to get out at a swing high or swing low, which again, you don't know it is such until after the fact. We have what's called an exit signal. This alert does not have an exit signal yet. An exit signal looks like this. Just in reverse, prices falling. As the move starts to run out of steam, this step line will cross, in this case, the red and falling CFMA1. The first green candle that closes above the step line, that's your exit signal. So on this move down, the exit signal was 29.02. Here we did have a pullback, but not enough to cause the step line, that's the little black line, looks like a set of steps. It hasn't crossed over yet. Now, once it crosses over, we'll be looking for the first red candle because this is long, so we'll be looking for the first red candle to close below the step line after the step line crosses over. So ask yourself this. If you had this alert last night, could you execute it? And if so, could you stay with it until either you hit an area that you expect to be good resistance or until the exit signal prints on your chart right before your eyes? I'll leave you to ponder that question for a moment. Let me go over the numbers from around the world. We'll see what happened so far today. Now, these are the cash markets. And I'm going to refresh my data, get some new data in. Here we go. What a turnaround Tuesday. John brought that up yesterday. He goes, well, if we don't turn around on Tuesday, then we got trouble. Well said, John. The Dow's currently up 465 points, almost 2%. NASDAQ is up 166. That's over 2%. S&P 500 is up 52. That's almost 2%. And the Russell 2000 is up 18. That's almost 1.25%. In the commodity basket, crude oil up $2.47, trading 57.40 last. That's a gain of 4.5%. Again, these are markets that a trader can only dream of. Except you don't have to dream anymore because it's now the reality that we have to trade in. Gold, on the other hand, down $3.89, trading 15.13 last. In the Asian markets at the close, Nikkei was down 229 points, a little over 1%. The Shanghai dropped 17, half of 1%. And the Hang Seng finished the session down 543 points. That's a little over 2%. In the European markets at the close, FTSE up 24, the DAX up 70, and the CAC up 52. For the CAC, that's a gain. It's one tick shy of a 1% gain. It gives us a red day in Asia, and the Asian market should be on fire when the session opens tonight. A green day in the UK, and so far it's a big green Radio Tuesday here in the US of A. Let's go to Michael right now and get a recap of everything that happened in the live training room today. And then I'll be back. We'll take a look at all of the alerts from last night, all the concierge, logic, everything that's happened this week. And of course, we'll talk to John. All that and answers to your questions. Just put them in the chat box. Take it away, Michael.
Okay, I got it. All right. Let's start out here. Okay. Good afternoon, everyone. Today is Tuesday, the 13th day of August, 2019. If you have not taken a free trial with us and you want to take a free trial with us, there are a couple ways to do it. One is you go to the homepage at CFRN.net. Right over here in the right-hand column, it says 5-day free trial. Apply it at CFRN.net. Click on that, and you'll be brought to this page. Now, the other way is you can go directly to this page. It's called eminitrainingschool.com. Either way, you're going to have to get to this page, and all we ask for is your name, your email, your phone number, and you can tell us your biggest trading challenge so we can tailor the one-on-one training for you specifically. Hit the send button, and we will send you all the information that you need to get into the live training room. First thing, the next trading day. Okay. Now, today was a pretty active day in the markets. Gold was trading so thin, I stopped trading it after the first half hour. I pretty much stopped trading everything after the first half hour. We had picked up $300 in the first half hour, I think. And then we got a couple more good opportunities, one on crude oil and one more on gold a little while later when things started to slow down. But I'll go through all of that individually in a few minutes. Okay, so today on the euro, we made 20 ticks. On crude, we made 30 ticks. And on gold, we made 20 ticks. That put us up $625 on the morning session. Today, it took 6 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract. And we took a total of 10 trades today. Now, on the month, we're up $2,962. That's over 9 days, averaging $329 per day. $329 per day. Yeah, I think this is going to turn out to be our best month of the year so far. On the year now, we're at $20,513. That's over 143 days, averaging $143 per day. Where do you see symmetry like that? Okay. Now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Now, the markets were so jumpy today that I'm not going to go over every single trade setup that happened. I'll go over every single one that we did, but not every single one that that was there, because there were just so many. And this is gold, and I stopped trading gold. Well, right back there where you saw those yellow those yellow arrows. But look at the way it was. Look at the way it was acting this morning. It was trading so thinly. It was just incredible. Okay, so the first one on gold right here, we picked up 10 ticks. Then we had a break even. Then, you know, there were trades in here. There were trades in there. But it was trading really thin and whipping around. So I just decided I was going to stop trading it for a little while. And there was another trade right there. And a long trade there, a short there, there. There, and there. Then it changed directions and it had a long there, and there, and there. And then it just kept going in that direction. But everything got all mixed up in the slingshot down here, right here, in this area. It was a long there, and a short there, and there, and there. And that's only up to 10 o'clock. So, you know, there's easily $1,000 a contract right there. If I'd have gotten in every single one of them. There's another short right here for that huge leg down right there. That by itself was just about $1,000 a contract. Changed directions and it started giving long trades up here. Okay. And I highlighted this one. I mean, I had pretty much stopped watching it after it was trading so thin that I had pretty much stopped watching it until it slowed down a little bit back here. We picked up another 10 ticks right here. And we had a break even right here. Then we're getting toward the end of the session here. I had a shorting opportunity there, along there, along there, along there. And then we're into the end of the session and it got a little choppy. Okay. So all the markets gave us plenty of opportunity today. All the markets that we typically trade gave us plenty of opportunity today. All right. Even the euro. And we started out here and we got our goal for the day with the euro right here. We picked up 16 ticks on the first trade. We missed this one over here, looks like, and this one right here. And here we picked up another 4 ticks on the euro. And then getting into the break, it got pretty choppy until recently. Yeah, right in here would have been a shorting opportunity on the euro. Okay. And crude oil, my favorite market. Hang on. Come on, charts. Don't fail me now. There we go. Okay, so we started out, missed the first one was right here. We missed that one, then we missed that one. Then we grabbed 10 ticks on this one on crude. And then the slingshot got all messed up because of the crazy activity. But once we got up above this weekly trading zone right here, there was a nice long opportunity, a couple of them, like 3 of them, to get in there. Then it changed directions, started coming down at us, and there were a couple of shorting opportunities in there, back down to the zone. But the markets were just bouncing around so fast. You know, I was having trouble keeping up with it. And, you know, if I'm having trouble keeping up with it, then everybody else is too. There was a shorting opportunity right here, another one right there, and another one right here to get back down to the zone. Then it changed directions and it had long right there. Pull that leg up. Now, so far we were just at plus 10 on crude. Okay. Then it went through all this in like, 30 minutes, and it slowed down a little bit. So I jumped back in right here and we picked up a 20 tick trade right there. While I was logging that, there were a couple of other trades here, one there and one there. And let's see, during the break, not really a lot happening during the break. You could have had a short right here, it looks like. But that was crude oil. We're plus 30 on crude. The ES, we didn't do a single thing with the ES this morning. Not to say that there wasn't anything to be done, but we didn't do anything with it. So let me back that out. So it'll be a little easier on you. Now, once the markets just started getting really crazy, I was like, you know what? Sometimes it's best just to sit on the sidelines. And, you know, of course, we already were up a whole bunch. Hey, Donnie. Okay, well, we can set something up, but today, I think today, I am full up today. Okay, but we can set something up.
I think I have some time this afternoon.
Okay.
Let me look and see. Yeah, I do. So, Donnie, if you want to book with me, you can. If it's something specific to what you're learning in the morning in the training room, Michael's your best bet there. But if it's anything else, I'll be happy to meet with you.
Cool. All right. Right here was a long opportunity that I had missed. And then I'm just looking at the slingshot to see how things progress. There was a shorting opportunity over here for that leg down, along there for that leg up. Then we broke up above this weekly trading zone. And I'm looking at the slingshot. The slingshot's just not letting us in. No, it wasn't. Just wasn't letting us in. And then we got to the weekly trading zones. All right. Then finally over here, it would let us in right here. Okay, a few times in there for long trades. Change directions, and in here there was a shorting opportunity, and in here a shorting opportunity. Back down to the zone, and that was all before 10 o'clock. All before 10 o'clock. You know, things were just moving around so fast this morning. Okay, so then we hit 10 o'clock, and hold on. There was a shorting opportunity right in here, and right in here, and then a long opportunity right here for that huge leg up. But I really missed a lot on the ES today. I was so focused on the other markets. And after a while, you know, once we got up so much, I was like, all right, well, let's just focus on training there. And there was a long right here. Now that was going into the high of the day, so I'm not sure that that was a valid long at the time. Okay, a short right in there. Another long right here. Another short right in here off the BBC right there. Okay, another short right there. Back down to the zone. Then this is all during the break. It messed around in the zone for a little while there. Then I'm just looking at the slingshot to see if we really had any good opportunity. Right, no, that was going up into the zone. Right here, coming off the BBC right there. And that was the morning. And that was, I mean, it was a fantastic morning. It was very busy though. Again, we did 10 trades. We missed probably 50, but we did 10. And out of the 10 we did, we're up $625 this morning. That's $20 on 20 ticks on the euro, 30 ticks on crude, and 20 ticks on gold. Today it took 6 minutes and 2 trades to get to the goal for the day. At that point, we're up $10 a contract On the month now, we're up $2,962. That's over 9 days, averaging $329 per day. On the year, we're at $20,513. That's over 143 days, averaging $143 per day. Look at the symmetry in those numbers. Last week, it was $136, I think. Something like that. Yeah. As long as it keeps going up, that's all it counts. All right. If you have not taken the free trial with us, go to the homepage at CFRN.net. In the right-hand column, it says 5-day free trial. Apply it at CFRN.net. If you click on that, you will then be brought to this page. Or you could go to this page directly, eminitrainingschool.com. Scroll down to where it says name, email, and phone. And you can tell us your biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button.
I say, refresh that page, sir.
Oh, do we need it? I haven't refreshed it in a while. No, look at that. Look at that right there.
Now, if you click start.
Okay. Oops, hang on. I did.
That's running pretty slow.
Oh, here. Let me hit that.
No, I didn't mean the video. I just meant the down there where it said click. Scroll back down. You hit click you click to start. Okay, pause the video. Refresh the page again. Let's see if there's something wrong with the page.
Okay. I can do start again.
Yep. It remembers you when you come back.
Okay. Now, if I hit click to start, it gives me another one over here. But I can just hit that right there.
Yeah, but the whole here, let me check my end. I was doing some adjusting on it this morning. Let me just refresh mine. Start again. Hey, this is not your first time here. I like that. That's clever. Okay, click to start. Click. Mine didn't load up either, so there's an issue. Well, I'm glad we checked this. Maybe she's working on it. 'Cause I talked to her earlier because the page was a little slow to load. So,
Okay, yeah, I thought she said she was going to do something a little while ago.
Oh, I wasn't talking about Valerie. I was talking about Isabel.
Isabel. Ah, okay. Yeah, I thought I saw some emails come through on that too.
Yeah, she. We both agreed that it was slow to load, and so I asked her, "Is there anything she could do?" I don't think there is. I think it's her issue.
Yeah.
Okay.
Isabel.
All right. Anyway, guys, when you go there, if that's not working, then you can just scroll down lower. We got a backup plan.
You can just scroll down there.
We got a backup plan.
Just put in your name, your email, your phone number, and do all that. Hit the send button, and you will be sent all the information you need to get into the live trading room. Okay?
Also, if you can go to CFRN.net.
Okay, let me refresh this one.
Yeah.
Because I haven't refreshed that in a while either. Okay.
Okay. You should got a pop-up in the lower right-hand corner. Did I break everything?
No pop-up.
Let me CFRN.net. I may not have finished my tinkering. Oh, it didn't pop up on mine either. But I know it's popping up on some because I keep getting messages that there's a new visitor. Okay. I had to do this incognito the other night for some reason, but then we fixed that problem. CFRN.net. Okay, so there's something amiss because they're both not. What I was going to show you guys is there's a live chat app now on the CFRN site. So if you need to get a hold of Valerie, of course, you can always reach her in Telegram. But if you're already on the CFRN site, if you just type something into that little chat box, Valerie and I are both monitoring it off and on, so you can always get it. That's one of the things about us. We're very reachable. When you have a question or you need something, one of us is always around, thanks to all the new breakthroughs in communications. Communication used to be a phone hanging on the wall. Not so. It's got a long cord now. All right, so go ahead. Finish up.
Remember when you used to have the 20-second delay?
Mm-hmm. Yep.
The FCC delay?
Mm-hmm.
And that was something. That was before we were visible.
Right. Yeah. Back in the day before we had video and charts, and all that noise.
Yep.
Just plain old radio.
Well, with that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am ready. Okay, let me grab the charts. Recap of the recap.
Today it took 6 minutes and 2 trades to get to $100 per contract.
It's a good bingo.
It is. Ding.
There it is. There's that bill.
Everybody hears that in their head, you know.
Good. I'm so glad. It served its purpose.
Okay.
Okie doke. I talked to John. He's going to be here in a moment. For those of you that weren't tuned in yesterday, and those of you that have been following the saga of Santa Fe, let me just bring you up to speed. Mining.com is the website. And where's that list? There's a list here somewhere. Let's see. Top 10. I think it was 10. Did it search? There we go. That's not the one. That's not the one. Not the largest. Where did they go from yesterday? Let's try Santa Fe. Well, let's see. Let's just say mining.com. $24 hour gold, that's not it. Well, those of you that were here yesterday, you saw it. But now I'm possessed. I want to see where it went. We were number 9 on the list. Let's see. It's on the front page yesterday. So maybe that pushes it back a day. Well, that's John. When he came on, he brought it to our attention.
He's still not there.
Yeah. Top gold. Right below the fold yesterday. Somebody out there in the audience, if you have the link to that. Oh, wait a minute. Mining.com. That's looking for yesterday. No. That's not going to bring me back what I want. I'll just wait for him to come and see where it's at, what the link is. And I'll show it to you guys when he comes back. All right. So we got the recap of the recap. waiting
Yes,
on
did
John.
good.
Okay. Now, I just explained to you guys somewhat in depth Logic 247, how it operates, what it does, what its purpose is. And last week, our results, well, if the 1-year anniversary week, we had 53 actionable alerts. 10 of them were stopped out, so 18% stop outs for the week. That was the anniversary week. Now for the year, we had 2,407 total alerts. 481 were stopped out. That puts us right on the nose, 20% of stop outs overall. Last week, I already mentioned we had 100 total alerts for the week. That left us with 84 actionable trades. 15 of those were stopped out, which put us at 18% for last week. Or that was for last week. All of this is done in real time, with the whole world watching. So I know that folks can get very creative with historic charts and historic data, and I said this, I meant that, the woulda, coulda, shouldas of the world, but that's old school. I mean, is that still going on? Of course it is. You know that as well as I do. The good news is you don't have to be victimized anymore by a market with no direction, unscrupulous vendors, creative geniuses with a historical chart and historical data. You can now know what's really going on, the truth about trading. Our alerts are delivered, Logic 247, live in real time, 24/7, with the whole world watching. I gotta encourage you, if you haven't taken the Logic Alert trial, you can. One trial every 6 months, just like the live training room. So if you've already taken the trial, then you need to book a mentoring session so that I can answer any questions that you might have. If you haven't taken that trial, I would not let another session pass by when you can have a definable edge that professional traders use to create consistent daily results. You can have that starting today at no cost to you, no credit card required. I'm that convinced. I'm actually willing to let you see it and use it before you pay for it. Because once you see it and once you use it, if you don't want to pay for it, well, that's okay. But that also tells me there's something you did not understand. Something transpired that just, you missed something somewhere. So take the trial, just go to eminitrainingschool.com, and if the little widget there doesn't want to help you, just scroll down old school and just put in your name, your email address. That's all we need. There's no credit card required. Think about it this way. If you've ever been an employer, and I know that a lot of the people in our family, in our tribe, traders have at some point in their career, in their life, been a captain of industry, ran your own company, that kind of thing. And being the boss, I mean, it's something most of us, dream of. And once we arrive there, we realize maybe, well, they didn't tell me this part. With the CFRN, Emini Edge, Logic 247, being the boss is pretty simple. No vacation pay, no sick leave, no health insurance, no HR department, no overtime pay. Wow, think about that. You don't even have to get time off for lunch or pay for the lunch. I don't eat much anyway. Now, I don't know where you're at in your journey up Trader Mountain. Perhaps you've been struggling, breaking even. Maybe you're just now getting on the plus side of break even. And if you are, and if you've managed to do that on your own, man, is that bell for you. That's a big thing. Bottom line is, wherever you're at on that journey up Trader Mountain, you got talent. But it seems like you're just always one mouse click away from greatness. Today can be the day that changes. I'm so convinced that the CFRN E-mini Edge will change your trading forever, and that's a long time. We're going to include a very, very, very special bonus. And if you want to know what that bonus is, call Valerie at 949-42-E-mini. 949-42-E-mini. 949-423-6464. All right. Let's look at the Concierge Trade Alerts from last night. Okay, if you want to grab a screenshot, go right ahead. There's John. All right, we'll jump to John, and when I come back, we'll go through the alerts from last night. John, let me get your mic open. There you are.
Hi.
Thanks, Valerie.
Hi there.
John, welcome to the show.
Hi there. Hello, Valerie. Good morning. Good afternoon. So, to everybody.
Hey, I was just looking for that page on the mining.com site. I couldn't find it.
Just a second.
I didn't bookmark the link yesterday.
You have to click on USA.
Oh, that's the first thing I didn't do right.
Yeah,
I didn't click on USA.
So, somebody just called my attention to, I got to do some investigation because they called my attention to some stock with similar sort of holdings to Santa Fe that went from 50 cents to $45
Really?
in the last run-up.
Here it is,
So
right
I'll
here,
have to
guys.
check that out.
I found it, John. I'm going to put the link in the chat box for everybody.
Oh, thanks very much. Okie doke. So, by the way, just to say what you were saying to everybody just before I came on, you just have to stick with it. One about getting the lucky break or getting that trade you're craving. If you, in a way, and you probably caught this. I don't know whether you had a buy stop there this morning, but
Which
this
one,
is on this run up in the market. Because if you remember yesterday,
we
I
caught
said as
the
long as we
S&P,
don't,
the Dow, the Russell, the NQ. We even
Right,
caught the
right.
down moving gold.
right. And so the thing is, good job, well done. So the thing is, your system, Dwayne, is a discipline-based system, and you have to follow it to the letter in order to win. But as I've said numerous times, you have an uncanny knack for catching, big down moves almost before they begin. A lot of times people wake up in the morning and sort of say what happened, and you can take some comfort.
Well, that's very kind of you to say. Thank you very much. I appreciate that. Okay. He'll be right back. We found the mining.com link. I put it in the chat box. And it is what it says. Top 10 U.S.-based mid-tier and junior precious metal companies. Core Mining is number 1. I don't know if these are listed in any specific order. The Northern Miner presents its top 10 list of U.S.-based mid-tier and junior precious metals companies. It doesn't say if it's sorted based on market cap. That might be it. Let's see. 967. Yeah, looks like it might be market cap. Okay, so number 1 at market cap of over $1 billion. There's Hecla, Argonaut, Gold Resource Corp, Gold Reserve, Vista, Fior, Sandspring, and there's Santa Fe, 30 million. market cap. In addition to the 3 past producing mines in Steeple Rock, Santa Fe Gold has acquired 5 other historic silver mines, the Alhambra, Blackhawk, Silver King, Good Hope, and Bullard's Peak. These are covered by 13 patented claims, 82 unpatented in the Blackhawk District in Grant County. You know, they say you find elephants in elephant country, and if there ever was a gold and silver country, it would be this area of New Mexico. There's been a lot taken out of the ground there, and we believe there's a whole lot more left. Now, this disclaimer that's up here for a lot of reasons, in particular in regards to Santa Fe. I am a shareholder. Some purchased on the open market, some as part of another business arrangement. It's disclaimed, disclosed, explained on a web page on CFRN. So if you have any questions. Now, I've said this before, I'll say it again. This stock, Santa Fe Gold, made me a millionaire. And I didn't sell a single share. Wah, wah. I'm serious. Ran up over $2. And because I was looking for $5, this is back in the days when I was still stuck on stupid. I visit that place occasionally still to this day. Nostalgia, I guess. But I was stuck there, and everyone who had followed me on the historic run up to $2, they were all busy taking their justly deserved profits. And I was trying to be another kind of prophet, the kind that predicts the future. And I said, I'm not going to sell a thing. I'm holding out for $5. Well, guess what? I'm still holding out. Years later, I even have a chart. I look at it sometimes to remind myself I don't want to get stuck there again on stupid. Now let's go weekly. Swing high was, that must be the, swing high, $1.81. Now I went over $2. You can see it here on the chart. I must be on the wrong, here, daily. Scrunch that up. Can I not go back that far? Oh, here comes more data. Maybe that is all the data I can get. What does that say? Anyway, you can see on the chart it went to $2, and I didn't sell anything. That's the moral of the story. So, along with providing the disclaimer that I have a vested interest in this company, I also want you to know that, yeah, right here, see? There it is. I don't know why the chart up top doesn't reflect it properly. Doesn't matter. Yeah, right there, 204, high 204 on that candle. So, here's the deal. This time, at $2, I will be taking profit. I will be easing out of some of my position, as they say. I've also said that as I ease out, I will let you guys know. I don't know. I may give an advance notice. I may not. So, yeah, take it for what that's worth, But just know that when the needle hits $2, Dwayne will be on the offer side. I don't suspect I would get out of all my position there. Can't think of any reason to, but certainly, because I don't want to have to live through this again with my wife, just to be completely honest. You know, when she realized what had happened, as long as we were north of $2, not selling seemed like a really good idea. You know, but as we began to fall from grace, well, suddenly it didn't seem, you know, quite as clever anymore. I bought my first share right about here-ish. I'll ride. Luckily, I'm still tall enough to ride the ride, and I'll ride it again. All right. So, if you need any further clarification on me, my position, where I stand, what I think, you can always contact me. Of course, I cannot give you individualized investment advice, right? I'm just some guy on the internet, some joker, you know, talking head, talking mouth. Can't see my head unless you watch that video from yesterday, and then I don't know if you want to. Speaking of, I wonder if that page sorted itself out. Yeah, when I was fiddling with that, I must have broke one of the little dealy bobs. That's a technical term. All right. I'll fix it. Okay. Now, we're going to go through the concierge. We already went through 2905 up to 2944. So basically about 40 points, $2,000 per contract traded. But again, getting out at the swing high or swing low, difficult, since you don't know it's a swing high or swing low till after the fact. Now, since we started the show, you see how the step line has crossed over, right? Let me open it up just a tad. See that red candle right there? If it had closed a little bit lower, if it had closed below the step line, that would have been the exit signal. This candle has been below the step line. See, the step line has to cross like it did. Now, if this candle reverses and closes red, whatever the closing price of this candle is, that will be the exit price. Now, using the exit signal built into our indicators will never get you out at the swing high or swing low for the reasons previously explained. No one, not man nor beast nor machine, knows it's a swing high or low till after the fact. Okay? Oh, let's say we close on the low of this candle. That would be 29.2650. Call it 20. Let's say it's 29.25. Okay? 29.25. That would still be a 20-point run at $5 per contract traded. Now, that's a lot different than the swing high or swing low. Of course, you don't have to wait for an exit signal. You could have gotten out at a weekly trading zone because you expect it to be good resistance till it isn't. And so far, it still is. And what we have is just a lot of consolidation in the upper side. If we get through that area, overhead. Now this is interesting. Yesterday, we were almost to the lowest weekly trading zone. We didn't quite get there. Almost. Now we have a thing, whenever we get to the highest or lowest zone by Tuesday morning, Michael talks a little bit about options. We didn't quite qualify for this week, but we were about 50 points off the lowest weekly zone for the week yesterday. Now we only have 2 zones left overhead. And I adjusted this 37.38. That is a current weekly zone. That you, John?
Yeah, sorry
Yeah,
about
welcome
that.
back.
Yeah, so I can't remember where I was, but I was complimenting you for
Yeah, that was
the
nice
stuff
of you.
you were
Thanks.
doing. Yeah, so look, I mean, a long time ago, there was a fellow called Jake Bernstein, and he had a brief interlude on CNBC.
I remember him. Didn't he have a name like the Bulldog or the Pit Bull or
Something like that.
Okay.
I know the guy. I met him personally several
really?
times.
Okay.
So
I think he wrote a book.
Not numerous times actually. I used to get on really well with him. But you know, I met all these fellows. You know, that fellow Fisher.
Oh,
I met
Fisher.
him
Oh,
when he-
the
Ken-
guy
Ken
that says
Fisher.
he
Yeah,
wouldn't
I met him
sell
before
an
he was
annuity.
famous. You know, he was looking for $500,000 back then. You know, he wouldn't take anything less than $500,000, and he's still doing it today. And he, you know, listen, the guy is a legend. You got to give it to him. He's done incredibly well. But you know that I think I told you the other guy who you think a lot of. Can't remember his name now. Greek guy. Remember Greek name? Cycles guy. A very very very.
Oh, the
big
guy
name.
that came on the show.
I think he did come on once. Yeah.
Peter
Peter right.
Yeah.
Peter
Yeah.
Leonidas. You know, he's a very, very smart guy.
We should have him back again.
Yeah, no, that'd be awesome. And we got to get Diamond and Silk on.
Yeah,
Dwayne.
you know what? It's my fault because she told me. She said if you don't stay on us, we're so busy. She goes, it's going to fall through the cracks. So she said, just stay on us. And so I've got to do Valerie, remind me, and I'll give you the email address, and you can
that'd be great.
till they show up.
That'd be great. So I can't believe this mooch. I don't know what's gotten to him. He's Scaramucci. He's gone doggone Trump in the last few days. He'll probably come back. He'll probably come back on track. But he's you know, I mean, he's a legend in his own time too. You know, Scaramucci's a pretty incredible guy. You know, he had a show on CNBC for a while too, some time back, and he's formidable. I mean, he really is listen. He's raised a lot of money for Trump, so I think Trump shouldn't really have called him out. I think it was unnecessary. But anyhow, going back to Jake Bernstein. What he said was, you know, he said, look, you know, 80% of success in stocks is discipline. I mean, I can tell you a few stories that again, another name that escapes me is there was a fellow called a bond trader who became the biggest. I mean, this guy became the biggest bond trader of all time, and he started out as a butcher or something. And then he got into, you know, he kind of found his way to the Chicago Exchange, and he stood in the pit for 9 months. He stood in one spot he used to have. This is sort of how his legend sort of evolved. Mm-hmm. He stood in one spot in the ring in the pit for 9 months before he did a trade. Right.
Wow.
So he kind of did. You know, he just watched the action. And then he started trading, and you know, his spot became a kind of a legendary stance, if you like. And this guy used to do 1,000 contracts, maybe 10,000 contracts, in a trade. So very, very big deal. Tom Baldwin was his name. Okay. And so, you know, and look, Peter Steidelmeier is another legend who I know him so well. I've done all his courses. I went to his ranch in Sacramento, in the mountains up there in Sacramento. I mean, this guy is fantastic. And he I mean, look, he just like you. He told me, you know, 7 years before I broke my world trading record, 12,000% in 3 months. He said, John, he said, you know, in next 7 years you're going to do something amazing, and he was right on. I mean, I listened when it was happening. I didn't even know I was doing it. It just happened.
Right? Yeah. When you're in the zone like that, when you're in the groove, it's just nothing else. Yeah. Right. Yeah, I know exactly what you're talking about.
You know, people talk about different things in your life that are, you know, that are huge, like, you know, when your son is born or something like that, and when you get married, but this was the most intense 3 months of my life, I can tell you. it just was like nonstop. It started one day and it didn't finish for 59 trading days, and 59 trading days later we were many thousands of percent. We were 12,000% ahead. So
That's
you know, it can have, you know, if you just stick with this. I found another guy that I can't mention his name right now, but I'm working with him online, and he's a very, very successful guy. He makes money every single day, a lot of money. And he just said, look, he's absolutely consumed with it. I mean, he just said, look, this has totally taken over my life. But he said, the good news is, you know, if I want something, if I want to buy a car, you know, or whatever I want to do, I have the money. It's just like going to an ATM. Right. And that's what you got to do. You got to you know, develop your own personal ATM, and learn to respect it, and be careful, because the markets are very violent, and especially today, but they're very rewarding, and you know, most of the time it's just, you know, you got to be in it to win it, and you've got to respect what the market is telling you, and I think you do a great job at telling people that every day. And but it is, I mean, listen, you know, what we're doing here, I don't think is replicated anywhere in the world. It is a unique show, and the information that people get, the advice that people get every day is, look, you know, we look at that thing on July the 25th. We showed people, like right just before it happened, we showed them what happened in 2011 and what could happen this year. And there ain't anybody in the world who did that, you know, two weeks ago. We did it here, you know. We showed them. Did we not go through the whole thing? Yesterday, we
absolutely did.
Right. Yesterday, we alerted people to the fact that silver, you know, the last time gold was at this price, silver was at $30. So, you know, it's at 17 right now. What does that tell you? I mean, it tends to think, you know, because the thing that most people probably can't see coming right now is the possibility this silver could just absolutely explode higher. You know, there may be a huge short position in silver. And, you know, we've told people stuff on this show that just is not on anybody's radar. We've explained to people before it happened why the gold was a great buy last August, when it was at the maximum short position of all-time record. And we explained how that was similar to the 2011 bottom before we had the 4-year rally, you know, which nobody saw coming in stocks. I mean, listen, you had Peter Thiel was on futures on the weekend. I mean, Peter Thiel is one of them. He's a genius. But you know what? He lost about $7 billion trying to short the market coming out of the 2009 bottom. Why did he do that? Because he wasn't the only one. How do you think we ended up with a bigger short position in 2011 than 2009? Because there were a lot of, you know, very smart Peter Thiels out there who were doing the wrong thing at the time. And if I'd been an advisor to him, I guarantee you I could have saved him $7 billion, because, you know, we were on this show and were we bullish or what?
Oh yeah, no doubt.
You know, we were super bullish. I mean, off that 2009 bottom, and
banging the drum.
And thanks. So you know, it's a different story today. You can't be super bullish anymore, because we've gone up a tremendous amount, and we're starting to run into headwinds. And in fact, there was a picture of if you go to it might be worth doing this for the audience. If you go to Zero Hedge right now and click on the right hand side, you'll see there's a picture of the New York Stock Exchange advance decline line, and guess when it topped out? July the 25th. See the close. I think we closed the gap. See that? Yeah, there it is. Look at there's your chart. Look at July. Look at the way that thing. I mean, did we fall off that July 25 top or what? We sure did. And you know, we called that. Remember, I said on Monday, be careful. The market could rally overnight, and it did. Go down a bit. Sorry. There's the NYAD.
Okay.
And Dwayne, next time Garrett comes on, I really want him to go back and go through the 90s with that what you call it, advanced decline line, because I think you're going to see a very different, a very different kind of chart than what we've seen over the last 10 years, frankly. And I think the reason for that is we were not in a third wave in the 90s. As it turns out, it was still a first wave. This bull market started, we had wave one. We had wave one of the 80. Well, we had wave one in 1975. Just for the benefit of the audience, there's a, the reason I keep comparing things to a century ago is because the Industrial Revolution started in 1875, effectively, with the advent of the steam engine and all that, and electricity and light bulbs and stuff. And you have to go to a linear display to get the. I don't know whether you can go to a linear on that.
Yeah, I don't know.
Or cumulative. I think it's cumulative. Has to be a cumulative thing.
I'm not sure how to do that on this platform.
Okay, actually, you can go to.
Now I do. It did offer me. It offered me a number of different things.
Yeah.
See here, we've got the decline difference, the decline ratio.
Yeah. No. There's another way of doing it, Dwayne.
Volume difference.
Stock charts. Go to stock charts. Stock charts. Okay, put in NYAD. You have to put a dollar sign before it. Sorry.
Okay, that's weekly.
You have to put a dollar sign.
Yep.
Ahead of it.
There we go.
Okay, should work now.
Yeah. There we go.
Okay, then you go down to the menu. To the.
Okay, gotcha.
To the. See where it says candlesticks? Make that cumulative.
There we go. And update. Okay, there we go.
So there it is. Yeah. So look, the fact that is correcting is a cause for concern because you never know if it's going to break down. If it breaks down, it's really bad news for this market. But right now it's rallying, and that's a good thing. But what was quite fascinating when Garrett was on the last time, and we were looking at this thing back in 82 and in the 70s, I mean, it was a real dog. This thing wasn't moving at all, right? And in fact, it was way down, and it came off some pretty low readings, historical low readings. Obviously, we're at historical high readings right now, but I talk about these people periodically. Ross Perot, rest in peace, God bless him. Joe Granville, the same. Dale Dudek, Michael Metz, Bob Prechter, who was somebody I know very well, and somebody else. I forget who the last analyst, but there was about 6 of them, and they were all kind of bearish, for all of the 90s. And you remember Robert Farrell was another one. Remember what I said about Robert Farrell in 1990? He was a chief strategist for Merrill Lynch, and when they said, think about this, we had the Roaring '80s, right? And we were up 387% from 1982 to 1990, even in spite of the correction in 1990 and everything else. And they sort of said to him, what's the 90s hold for us? What's the future for the 90s? And he said it was going to be a boring decade of anemic growth because nobody saw another decade like the 80s following on, right?
Yeah, right.
And of course, with the internet and deregulation of the phone system and everything else, that was a huge stimulus for the 90s. But the advanced decline line, as far as I can remember, was not making new highs during the 90s for a lot of the time. It was for some of the time, I think. but for most of the time it wasn't, and that's probably what caused a lot of people to be bearish, including smart people like Bob Prechter and all these other guys. I mean, my understanding is that Bob did something similar to me a while back, with options. He had about a 80 fold return on options versus my 120 fold return. So, but he's certainly somebody that you don't want to underestimate in any way, shape, or form. But sometimes these guys can't. Even the best Elliott wave people misread Elliott wave. And
yeah, I mean, there's what does that saying go? If you put 10, if you put 10 Elliotticians in a room and ask for a wave count, you're going to get some different results.
Right. So but there's no question that this decade has been epic in terms of stock upside. There's never been anything like it in terms of trillions added to the value. And this is totally different from the 90s. I mean, listen, my read of it is, we're just going back to the Industrial Revolution. So, remember, it all started in 1875, and then you had a big run up into the turn of the century, and then you had a lot of problems in the first decade of the 20th century, and then you had a big rally off the 1907 bottom to really all the way to 1921, and then the market literally went back and tested that bottom of 1907. So I'm telling you, in 2021, the market might look fantastic if Trump gets reelected and everybody's, thinking that everything's going to go to the moon, and that's probably the time when the market might seriously crash and maybe come back even down to below 10,000. So, that's information to keep in mind for the future, because it'll be a very profitable venture if we're all still able to do this. It could be one of the greatest trades of all time, because I expect it to be a pretty quick recovery, just like 1921. And then I not only that, I think we're going to go into the roaring 20s of the 21st century. That's going to be like something we can't even fathom right now, because we're going to be so far advanced in just a few years with all kinds of new things happening, that I think it'll be a time for the ages. And so really, this whole bull market that really started from 2016 onwards is really a 15-year bull market that's going to take us to 2030 or 2029, depending on when the market peaks out, ahead of some probably pretty big problems in the 2030s,
Right.
much the same as the 1930s. So
Take a peek, John, at this when you get a chance. Take a peek at this daily silver chart.
yeah, well, that's a bit of a problem. What happened this morning?
Well, I don't necessarily like that candle we're building right now. This is a daily chart.
Yeah, it probably means we're going to pull back a bit. Look, what happened yesterday, the JNUG went to 100, and the gold was still going up as it did go. It went higher, but the gold stocks have gone down since then, quite a bit actually. And I told people, get out of the gold yesterday. Even though I had an outage in the morning, I missed the highs, but it was around 95, and I just said, look, you better get the heck out of this thing. And it went down to 79 this morning, so that just shows you, I mean, that's just incredibly volatile. So, but it does imply that we're going to have a bit of a pullback, but it's going to be interesting to see.
If you think about it this way, now we're always waiting for this pullback right here. That's our thing. I mean, look at how close when this candle. On the low, we almost pulled back there to the BBC. So it's possible this thing could turn itself around from here. I mean, I know it looks horribly bearish right now, but if you think about, because if it had come down and touched,
if it trades inside for a few days and then goes out the top, yeah, it will be very bullish, and that could be what's going to happen. We'll just have to sort of play it by ear.
Yeah.
For example, Royal Gold hit 131 this morning, and it's at one point it came back to 122. So
RGLD, right?
yeah.
There we go.
See that now? And in fact, that looks like it's done it. It's, and I told you, I said, listen, what did I say when this thing was 100? It was about 100 or 108. I said it's going to 130, and then it's going to run into trouble. Listen, this thing could come back to 100. It could come back and test that gap. See that gap there at 100?
You're talking about
Bit lower.
100 right here. Yeah. Oh,
yeah,
right there.
see.
Right there.
Right. Yeah. So that could cause, we may be headed for a correction here, but generally speaking, gold tends to rally into September, so it may be short-lived. So just going back to the Industrial Revolution. So the technological revolution started in 1975 with Intel and Microsoft shortly thereafter, and so the first wave was from 75 through, or late 74 through 77, 78. Then there was a pullback. Then we made a high in 1980. Then there was another pullback into 82, and then a big first wave happened right up to 1990. Then there was a Gulf War correction, which was about a 24%er, and then January 16th, a very famous date, never forget it, January 16th, 1991, start of the Gulf War.
Here's 91 right here on this chart, John. I got the
Dow
Dow
gapped. The Dow gapped 70 points, and look how long it took till 1995 before the market went into really that big. So that was another 1-2 wave, right?
Mm-hmm.
So, and then then we had the A wave. So the top of the A wave the top of the first wave is 2000. Second wave was down to 2003. Then we had a B wave up to that 14,000, and a C wave down to the 6,666 or so. Mm-hmm. And this is the third wave. Now, did I read it right? I think I did. So we're in a third wave right here. We're still in a third wave. It's that chart really tells the story.
Okay, now what signals? I'm not a wave counter. Just never learned. But so we're in a third wave. What's the significance of that, and what does that ultimately lead to?
Well, the third wave is where everything goes up. It's like, and that's the reason why the advanced decline line is going way up, because it's the body of the market. It's like the bell curve, And so in the previous waves, it was probably the leaders that were going up, but not necessarily all stocks. So, I mean, there's just no question that we're in a third wave. And, third wave, the more we get into it, the more participation there is. And, it just becomes a time when everybody benefits from the market effectively. So it really is dramatic when you look at that. There's no question. I mean, and I actually think we may be starting some sort of a fifth wave from here. Maybe it's premature. Maybe the fifth wave will start in 2021 or something, take us all the way through the 20s. But it is a huge, it's a huge market. There's no. It's got enormous upside power, and there may be a lot more still to come.
Yeah, I think you're right.
Yeah, I mean, look, if the dollar goes down, it is virtually it's gonna certainly add 20 or 30% further upwards to this market.
Here's the dollar.
So, it's a very critical point in this dollar, because it does look like it's starting to break down, and it just needs, if it suddenly drops a point or two and breaks that 96, starts heading down to new lows. I mean, it's certainly put in a pretty sharp peak there. I think you'll agree, in the last few weeks. And look at what happened the last time he made a sharp peak on the dollar. I mean, it went down, about 3 or 4 points from that peak. So that would certainly help gold and the market itself if that were to happen. But if it breaks down and really goes into a downtrend, a bigger downtrend where it goes down to 90, 88, goes all the way down to 80, that'll have a transformational impact on the world like you can't even imagine. And by the way, we're seeing a nice upturn in the oil today too.
Now, John, what do you think really? I know it's been said, but what do you think really motivated Trump to belay these tariffs? I think he said it was because of Christmas, which is a ways off.
I think
it's because of the markets. Do you think it's a downturn the markets took yesterday? Do you think that spurred him to action?
Partly, but I wouldn't be surprised if we got a few calls from people like Tim Cook and a few others who, said, I think it's very smart because the things that people are really buying, like TVs and phones and things that are critical to their lives, are kind of off the hook now. So they're not going to get impacted, at least for the foreseeable future. And you never know, he might have had a call with Xi and they just agreed to kind of like, maybe he got a bit of a good vibe from somebody and just decided to ease off a bit, I think it was very smart. I think it was very clever, frankly.
Well, it was certainly good for the markets, no doubt.
Well, look, it changes.
But it changes
go
the
back to the
dynamic.
S&P.
Yeah, what are they saying? He flinched.
You can go back to the S&P and see how it affects that big spike. Because remember yesterday we said, it might go down and test. Yeah, if you can go to daily.
You want to go to daily? Okay.
I mean, that'll just before you go there, Dwayne. That breakout is very bullish. I mean, boy, and this, what it reminds me of? It reminds me of the beginning of June when we had that 500-point update. Remember? And you might have thought you were buying the highs or buying a, but you have to have the discipline to stay long after a move like this, because this is a kind of a game changer type move. And if you go to the weekly, on the S&P, I mean, already the daily is turning bullish just from that chart, as you can see, right?
Yeah, actually, today, that's what we talked about yesterday. The next high probability thing here was a pullback to our little indicator there, the BBC, the bull bear cross. Now, this will either hold or it won't. This is what it looks like.
It's
doesn't
super
hold.
critical. It's got to go. It's got to go from here. But the thing is, if it goes, actually, there could be vertical up move from here. I mean, it could be, straight up to new highs. That's what I was kind of saying.
Yeah, no, I agree with you. If it can get through there, this is a real critical test, and it could drag out, for more than a day, more than a session. We could walk sideways a little bit, but it needs
now, if you go to the weekly, I think you'll see that the weekly looks super bullish now. And you see how we got that test, and now we've got that green doji.
The weekly is absolutely poised for liftoff.
Exactly.
Doesn't get any better than that.
Yeah, that is a really super powerful buy signal.
Oh yeah, absolutely. And that's from a weekly perspective. So, folks, you can't take weekly information and go to a 5-minute chart. I mean, you can and you should. You should know where you're at weekly. You should know where you're at daily. But you can't take a buy signal off of a weekly chart and just go immediately apply to a 5-minute chart, because, as you know, price never travels in a straight line. It channels back and forth, back and forth, back and forth. So you've got to time that thing. Yeah.
Sorry, if you can go to the TVIX as well.
Sure.
Because remember what we said yesterday, we said it's like a one way or the other bang type situation. And I even told people yesterday to be careful of that thing.
Now, this is daily.
Yeah. Go to the 30 minute, I think.
Okay. Okay, there's 30 minute.
I mean, look at the way it came back. Remember, we were talking about that gap yesterday, and now it's dropped back. So, I mean, it really looks like it's going to crash, this thing. Do you see it?
You don't think it's going to take another leg to the upside here?
Well, it might do. It did rally a little bit here this morning, but it looks like it's coming off again, you know. So
I see it running into trouble, you know, right about here. But it may not. It's like you said yesterday. It's going to do one of two things. You know, we're either going to take out this high or we're going to take out this low, one or the other. And that's the beauty of futures. When you can see clearly what direction the market has taken, just go with it. Just hit your ride.
Yeah, look, you know what? Actually, if you expand the daily, you know, to where you don't have that big base. If you go back to the daily, you know, almost every top in this fix has had some sort of a setup like this.
There's a bearish engulfing candle if I've ever seen one. It's not a picture perfect signal, and if this was perched up here, if you choose to learn to speak candlestick, context is everything. The signal in and of itself, you need to learn the signal. There's hundreds, but there's only about 10 candlestick signals that you really need to know. Learn those, but then you've got to understand what it means to be in the proper context. Because a bearish engulfing or bullish engulfing, as powerful as those are, if it's not in the proper context, then it really doesn't, you know, convey any important information. Just remember that candlesticks are a graphic representation of investor or trader sentiment for whatever time frame being observed. Go ahead, John.
Yeah, just for the memory, you know, for the next time, you know, one of Peter Steidelmeyer's big things in market profile, and you know, he was, I mean, because he came out of the pits. You know, this is a guy, by the way, who in 1976, when gold hit $104.6, he was able to see in the pits that the market was not facilitating trade. In other words, just like that bottom of the TVIX, you saw those two little days, very tight doji type days, one day down, one day up. See here, see the market wasn't facilitating trade, and it gets to a point where, yeah, exactly. So, and what happens is when the market's not facilitating trade, and then it starts changing trend, and the trading increases, that's usually a go with type situation. That was one of his favorite expressions, go with. You know, because if the market's facilitating more trade at a higher level after being kind of in a log jam or at an inflection point, you know, you're going to get probably a pretty significant change in trend. So what this guy did was totally legendary. He bought 100 contracts. No, sorry. He bought, I think it was 235 contracts of gold. Literally the day, or pretty soon around the day of $104.6 back in 76. And you know what? He held them all the way to January 20th of 1980. Wow. And he sold them out. He sold them out around $870, something like that. He sold right at the top. He bought right at the bottom, and he sold right at the top. And he made several $100 million on that trade. So you know, just an amazing guy. And you know, he's the founder, the inventor of the market profile, which is all about the bell curve. You know, of how trading,
distribution,
you know, exactly. Yeah.
Where price is most comfortable trading.
Right. And you know, some of his guys, you know, just like Richard Dennis and the turtle traders. You know, a few of these turtle traders have gone on to be billionaires. And you know, a lot of the market profile guys have done very well as well. So,
Leslie used to be one of the brokers for one of the original turtles.
oh, okay. Wow. Wow. That would mean something.
Yeah. Anything else you want to cover?
No, listen, thanks. Great trade, a great show, and thanks very much for the invite.
Thank you, John.
So just, just to recap, you can see how, really, when you see showed that big chart of the market going back decades, you can see how the start of the technological revolution was really where the market broke out and started accelerating to the upside, just the same as the Industrial Revolution did from 1875 through 1930. And the interesting thing is that all that's happened in the world since then has been, remember, from 1875 through 1930, the economy was growing about 1% a year, and the market grew by a few percentage points. But when you look at 1975 through to date, I mean, you got the living embodiment of wealth creation in people like Warren Buffett and all those people like him, who, Stanley Druckenmiller and George Soros, Jim Rogers, all these guys, they all, were basically have ridden that boom all the way from 75 through today. I mean, remember that lady?
Right.
You remember the lady who turned 5,000 into 22 million? Remember that?
Yeah, I do.
I mean, she's another one. She didn't know. All she did was like switch into the right stocks at the right time, but she rode that wave. And by the way, that was when she died. That 22 million. Do you know what that 22 million is worth today? If it's still, if it's just sort of continued, it's probably closer to 100 million today.
Wow.
Because that was in the 90s. She'd made 22 million by the 90s. Think about that. She started in the 30s, admittedly, or maybe the 40s. I forget when it was, sometime around then. But everybody should really, if I was a teacher, I think they should teach everybody in school that story, because it's so empowering to know that little old lady. She was so mean. She didn't even want to buy the newspaper. She didn't buy the Wall Street Journal.
Now I really do remember who you're talking about.
She used to go down to the library to read the paper, so she wouldn't have to pay for it. I mean, and she just read the paper every day, and she'd call her broker and tell her to switch to this stock or that, and she just had an unbelievable run. But the lesson from it is, it's kind of like we were talking about, that idea about giving a baby, if they'd have put this into action and given every baby $1,000, at birth, from 2000 onwards, and did it every year, and then they had some kind of a way where that money could be invested in the market, and if the people match the investment, so a 19-year-old today, if they were allowed to match it, could have 38,000 accumulated. Think about that, and imagine if that had been invested in the market every year since. I mean, he'd probably be worth $500,000 today or more. The average 19-year-old would have a massive safety net. It's really a very powerful idea that should be implemented. You get the gist of it?
I sure do, and I agree with you. Yeah, we've talked about that for a very long time.
Yeah. So.
Well, and I mentioned this the other day. I think is it Hungary, where they've got this new plan. It's completely different from what you're talking about, but it has to do with babies. Because their population is on the decline, they're trying to encourage, if a family gets married, they get some money, and if they get married, they get $35,000, and if they have 3 children, they never have to pay the money back, and if they have a 4th child, they never have to pay income tax again for the rest of their life.
Oh yeah, I saw that. That's amazing.
What a bonus plan that is! Wow.
Yeah. Yeah, I don't think that's going to. I think the country might go bankrupt at some stage with that kind of a
No,
plan.
it's amazing. All right, John. Well, thanks for everything.
Okay.
All right.
Yeah,
Have
all
a
the
great
best.
afternoon. Talk to you soon.
You too. Bye.
Okay. Okay, we found the mystery missing page, which was here. I think I might already put it in the chat box. I'll put it in there again. If anybody wants to look at it. I also put the link in the chat box. Swing Traders out of beta. Okay, if you want to participate, there's a monthly rate, there's an annual rate. If you have any questions about anything, get a hold of Valerie, 949-423-6464. 949-42 Emini. So the S&P Concierge Trade Alert last night, considered being a long, 29.05. There's the swing high, about 40 points overhead. And it looks like, now this last candle, we almost had an exit signal there. See how the red candle did not close below the step line? Unless something changes, this candle, which has 12 minutes left in its lifespan, if we get just a tick of red below the step line, that will be the exit signal at the closing price of this candle. Okay? And it's got 11 minutes left. On the Dow, the alert was to be long 26,130. Ran up 278 points. I adjusted this zone. This is this week's weekly trading zone. Again, partners, passport holders, they get the zones every Monday morning, 6:15 a.m. Eastern. We've been publishing the zones for our traders since December 14th of 2009. Monday morning, 6:15 a.m. Eastern, in your inbox and in the private Telegram channel. Every Thursday, if I haven't leaked them already, I share the zones with the community at large, because if you jot them down, they can help you out the remainder of Thursday and Friday and Sunday night and Monday and Tuesday. Anyway, we came ever so close to the zone on this move up. The S&P, we actually got there. On the Dow, almost. Zones are an area, just like fibs. And just like fibs, it puts an exact number on your chart to the tick. But price does not always obey that to the tick. You might hit it like we did on the S&P. You might come a little bit short like we did on the Dow. As we look at the other ones, maybe one of them even spiked their zone for this week. I don't know. We'll take a look. All right, so that's the story on the Dow. And again, if you didn't have a chance to grab a screenshot of last night's alerts, I'll put them back up again real quick. We have two types of alerts. The Concierge Trade Alerts, which is a static report, goes out every evening shortly after the Globex Open. Try to get it out before 9 p.m. Eastern. This allows you to put two lines in the sand. If price gets here and above, I want to be looking for long trades. In the short number, if price gets here or below, I'm going to be looking for short trades, and everything in between the two lines that you put on your chart. That's the market trying to make up its mind. I prefer, personally, to let the market make its decision, then climb aboard. I get car sick with all that back and forth, herky-jerky, up and down, while the market's trying to decide. Let it decide, then climb aboard. It's one way of looking at it, thinking about it. Okay, so that was the Dow, now the Russell. Okay, the Russell said, consider being long at or above 1506. Now we did, this is an old zone right here from last week. This week's zone looks a little more like this. So on this one, we spiked the zone. $15.20, $15.19. Consolidation. Only three things happen when price encounters a weekly trading zone. The most likely, consolidation. Second most likely, rejection. And the third is what we call the slice. All right, so that covers the Russell. Oh, and on the Russell, we do have an exit signal, okay? Not yet on the S&P, not yet on the Dow, but on the Russell, this candle right here closed at 1510.70. Again, you can get out at a weekly zone. You can't get out of the swing high except by luck. But you can get out of the zone because you expect it to be good resistance. You can wait for the signal. The signal's never going to get you out of the swing high or swing low. But it will keep you in perhaps longer in some cases than you might have stayed in without it. Okay, so now in Q. The NQ 77.55. $77.55, yep. NQ pays $20 per point. So from 55, it ran up to 89.50. Call it, is that 35 points? So that's $700 per contract traded. Okay. Now, no exit signal involved here because we did not get an extended move. Okay. Crude. Crude just printed an exit signal right there. That's how it works. Every time you get an extended move, did it get you out of the high, which was 57.47? Nope. Did it suggest getting out at 57? It did. Okay. All right, and the actual alert itself was to consider being long. $55. 55. Swing high, 55.30. So there was a $300 per contract move on the initial trigger. Important prices, important areas are often tested. Here's the test, and that led us to here. Now, did we hit a zone up top? We did not. In fact, we flew right past the zone. It looks like we're pulling back to it right now. Let me just say this. If price pulls back to 56 and holds, you might consider being long. Okay. This move from 55 to the exit signal at 57, that's $2. That's $2,000 per contract traded. From there to there. If you've earned the right to trade 10 contracts, then please don't trade 10 contracts. Don't trade any contracts until you've earned the right to, okay? Talk to somebody. Yesterday, I had a mentoring session with someone who has been at this for, it actually spurred that doggone video I made yesterday about, how much time and treasure are you going to spend? How much have you spent? How much do you have left? That's really the question. It's time to right the ship. And I encouraged this individual who's been around us for a while, but his focus has not been, really following what we lay out. And that's the issue. He's a great guy, smart guy, knows a lot about the markets, but he's inundated with all the information, all the knowledge, all the stuff that just comes flying at you every time you turn on the TV or the radio, open your email, open a web browser. Everybody's got some new way to skin the cat. Poor cat. And after all of that, all the time, all the money, here so many traders sit with unskinned cats. There's all these different ways to skin a cat, but that cat got 9 lives because he's still got his skin, right? Stop the madness. I mean, what's hard to understand about getting long at $55 and taking your profit at 57? It doesn't require any advanced training. No degrees, no PhDs. You don't have to be a math nerd. If you can point and click, if you can read, if you can do some simple math, if you can follow directions, and that's a huge thing right there. And some people are desperately trying to follow directions, like my friend yesterday, but he's getting directions from so many different things. Should I use this time frame or that time frame? Now I'm a big fan of multiple time frames, but 2. Of course, I look at dailies and weeklies. I look at all the different time frames, but not every 5 minutes. I use a 30-minute chart to help me understand. It's like my weather forecast for the current session. And then a smaller time frame if you want or need to actually execute the trade. So this thing triggered this morning during the 9:30 to 10 a.m. candle when Wall Street opened. So let's take a look at 9:30 this morning on a smaller time frame. Let's do that. Let me just point out real quick before I change this chart. Silver on the daily chart had a bullish cross June 7th. The last bearish cross was March 4th. So March 4th, bearish cross, took silver from 1587 down to 1435. And then the bullish cross right here, which took silver from 1475 up to 1745. You'll notice that we stayed above the BBC the whole trip. Markets are fractal in nature. What you see in the morning on the range chart, you'll see on a 30-minute chart, on a 5-minute chart, on a daily chart. $13,000 per contract rally. Now, we did not have an alert or a swing or anything on this. I'm just pointing out. But this bullish cross, whether we follow it or not, it happens. Whether you're asleep or on vacation or out to lunch, the markets are always working. I mentioned earlier about with Logic 247 as your analyst, so that you don't have to hire somebody and fund vacation pay and sick leave and health insurance and all of that stuff. It's all working when you're not. It's working so you don't have to. You just have to check in periodically, assess what's happening, what's going on, understand what the market is trying to do, and then just participate with the market. You're never going to be smarter or taller or prettier or have more money. I'm certainly not. Maybe you will. I don't know. Maybe you'll succeed where I failed. But I just always agree with the market. That's my goal every day. Wake up to discern what the market's trying to do. And then I just want to go along with the ride. Go along for the ride. This is a historic chart. Anybody can look like a genius with a historic chart. I'm not trying to look like a genius. I'm just pointing out. There's the last bullish cross, bearish, and here's the last bullish cross. Participating on either one of those events would have been eventful. And then prior to that, there was a bullish cross back December 11th of last year. So December 11th took us to March 4th, which took us to June 7th. That may seem oversimplified, but let me assure you, trading's not easy, no, but it can be simple. All right, so back to the crude. We were looking at the moving crude right here that triggered off the 9:30 opening candle. So now I'm going to get rid of all this, make this a crude chart. I'm going to put it on 5 minutes. Now, before we get too carried away with crude to the upside, just look at what we're dealing with here. This has been an incredibly bullish move. With the Saudis cutting production, so they said, and you know we don't get caught up in fundamentals and news and stuff, but that's just kind of so obvious that you can't help but at least think about it. So we had a nice run up. Now the market has to make a decision. Are there enough buyers to support a continued move higher? If not, catch another leg to the downside. This would have me very cautious about going long at this point. Okay, that's all I'm saying. Just proceed with caution. That's all. Okay, so make all that go away. Make this a 5 minute. Okay. Now, let me open this up. We want to go to that 9 o'clock candle this morning, or 9:30. Here it is again. All right. We had a Concierge Trade Alert to consider being long, $55. It triggered during the 9:30 opening candle. Now we're going to go from this 30-minute view to a 5-minute view. Okay. Here's 9:30. Okay. On the 5-minute, however, let me open this up a little bit. There we go. The 5-minute, however, you'll notice we had a bullish cross that took place about 9:05. Bullish cross. Price pulled away. Price pulled back to physically touch. Up close. Consider being long on the open of the next candle. This guy. If you watch a 30-minute, it'll help your nerves. You won't be so jittery. You should lay off the caffeine anyway, but that's another story. I haven't. But on a 30-minute, really once you're in the trade, and once you're convinced that you are participating in an extended move, and you're waiting for the exit signal, there's no reason to hawk every tick that back and forth that the chart makes, because what you're waiting for is this on an extended move. So you know the price you want to trigger in at 55. Okay, Now, here's 55 on this chart. Okay. Could you have gotten in here? Yeah. Or maybe if you want to, some confirmation that it's going to trade above that trigger, perhaps the open of this candle. Okay. And if you were doing that, then you could put a stop loss here. Our partners and passport holders know the method that we use for finding the optimum stop loss placement based on chart structure. So this is a little simple here, but just to give you an idea. Now, remember what I said, that everything between the lines, between the long line that you put on your chart and the short line, is the market making up its mind, right? If you have experience with our methodology and with our indicators, then you might very clearly see the bullish cross, the price pulled away, the price pulled back to physically touch, up close. So your thinking now becomes, all right, I'm getting long here on the open of this candle. It's ahead of the trigger. I just said that everything between the triggers is the market still making up its mind. But this looks like a pretty good indication that the market has made up its mind and is now getting ready to get busy. Okay, maybe it is, maybe it isn't. Price could have just as easily stalled out at the previous swing high and not triggered, right? Okay, so if you understand that, when you take an entry on the open of this candle at 54.61, just know that by 54.81, you need to be looking for the exit. Just so you know where it's at, right? The exit door. Just because this could be good resistance. Okay, all right. Picture perfect here. Look at that. Cross the 50-yard line at the same time. Blue and climbing, blue and climbing. Let me just say, when you got blue and climbing, you don't have to be long. Please don't be short. Pretty please? All right. So if you get long in the open of this candle, 54.61, at 54.71, that's $100 per contract. 54.81, $200 per contract. And you're prepared to take your leave if this previous swing high becomes good resistance, but it didn't. We closed above it. Remember, this is a 5-minute chart, okay? And then the trigger, and then boom, 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 right? Okay. All right, so that's the deal on crude today. Gold. Gold. How you've fallen from grace. Not really, just a pullback. Gold, consider being short at or below 15.16. Okay. We had a swing low all the way down at 1490. That's a $2,600 per contract move. If you've earned the right to trade 10 contracts, that's a $26,000 move. It doesn't change the fact that getting out at the swing low is pretty doggone hard. And when you have this dramatic of a move, look at what happens to the exit signal. Do you get one? Yeah, you do. But look where it is. Goodness. I mean, it's still a decent trade. It's, $300 per contract. But there's all this. So when you get this exaggerated a candle, I mean, in 30 minutes, this thing dropped from 1530 to 1490. That's a 40-point, this whole thing, this candle represents a 40-point drop. $4,000 per contract. But from the entry to the swing low, $2,600 per contract, 26 points, $100 per point. So when you see this kind of an exaggerated move, waiting for the exit signal can often cost you considerably. So you may have to look at some other things. Did we have zones in there? Sure. We had a zone at 1504. And, well, I guess it'd be wrong to not show you. So I will. If you think I'm making that up, just ask a CFRN trader and they'll be happy to tell you that, yes, indeed, they had a trade 2 target down there at 93/94. Short. Now from there, we did have an interim zone at 1511/12, and then 0405, and then we finally turned back up down at 93.94. So any place that you chose to exit along the way would have worked out just fabulous. All right. We don't look at the beans too much, but they are part of the Concierge Trade Alerts. So let's take a peek. Last night, the Concierge Trade Alert on beans said to consider being along at or above 896. Okay. Swing high was only 896.75. So if you're looking for a stop out, there you go. This one definitely had one on board. Now we've pulled back to the BBC. Do I like the idea of being along from here? Yeah. About as good as it gets. We're above the 50-yard line down here on the slingshot. And this has turned red, but that's because of the pullback, right? It hasn't hooked down yet. It'll be interesting to see what the next 30-minute candle brings, but that market's going to close. It closes early. So we'll look at it again tonight on Globex. And also bonds, 30-year bonds. That's part of the Concierge Trade Alert as well. Last night on bonds, we said to consider being short 162.17, and that's here. Swing low 162.05. So that's about 12 ticks at 31.75 per tick. 31.75 times 12. My calculator's messed up. Alexa, 31.75 times 12.
31.75 times 12 is 381.
All right, so it's $381 per contract move. Bonds are kind of a different animal, so be careful out there. Look at them, watch them, and it's with everything. Always trade in sim. Always trade in sim until you reach a place of consistent profitability. Now it's okay to deploy live soldiers to the front line. Keep all your soldiers alive until it's ready to do business, until you're ready to do business with the market, right? That's what that sim is for. That's no badge of shame, I'm just sim trading. Well, no, smart people sim trade until they're consistently profitable, and then they go live. And when they run into trouble, they step back into sim, to the safety of sim, to sort out what's going on. It's difficult to make rational decisions when you got bullets flying by your, past your head. Step out of the line of fire. Stop the bleeding, the hemorrhaging, right? Figure out what happened. It might be you, it might not. Might be the market just took a turn you weren't expecting, that you didn't anticipate. It was not, what the market just did maybe was not the next high probability thing, as you understand it. Okay. That's why we use hard stops to cover when that does happen. Also, Swing Trader out of beta. I put the links in the chat box. You can have a monthly subscription. If you want to save some money, you can go annual. Okay. If you go monthly, you can cancel at any time. If you go annual, you can cancel at any time. What we request, though, if you do want to cancel, give us notice 5 days before your current, if you're on the monthly, right? And if you don't want to receive the Swing Trader alerts anymore, try to cancel it, or just please cancel it 5 days before you get billed again. That gives us time to go in there, you know, and make sure, because if you don't want to get billed again, trust me, we don't want to bill you again. Last thing in the world we want to do. So just give us that heads up notice. Hey guys, and you know what? I want to say no questions asked, but I know me, I know us. We're going to add, well, because if there's something wrong, then we want to know, right? Maybe your answer might be, no, I just don't have time to actually participate. Okay, well, we don't want you to throw away money either. So what I'm saying is if you decide you want to cancel, nobody's going to grind you, right? You know, come on, hey, keep it one more month, man. You know, no. Mm-mm. This should be a service. This should be a blessing in your life. If it's not, you don't need any more headaches, I'm sure. None of us do. Okay? So the link's in the chat box. If you need any further explanation, clarification, whatever the case might be, call Valerie, 949-423-6464. 949-42 Emini. Okay. The time has come for the good word for the day. Today. Today is the day. Now, we've all heard since we were kids, be honest, right? Tell the truth. I try telling that to some of the vendors out there, but I digress. No, seriously, it's in the Big Ten. I shall not lie. Colossians 3:9 says, "Don't lie to each other." Talking to the disciples. Try to answer the following questions honestly. Just between you and me. Nobody's looking. Nobody's listening. You can do it in your head. Keep it top secret. Would you lie in order to get yourself out of a jam? And of course, the attorneys in the audience are going, define jam. Because is this a serious jam, or is this like a misdemeanor jam? Well, let's just call it a jam, all right? Would you lie in order to get yourself out of a jam? Question number 2. Would you lie to impress someone? And number 3, would you lie to avoid dealing with the consequences of your actions? How'd you do? In a major survey in the U.S., people were asked, what would you be willing to do for $10 million? 10 million U.S. What would you be willing to do? 25% of the folks surveyed said they would be willing to abandon their families. Some people would probably do it for free, right? I understand. 25%, that's 1/4. 23% said they'd become a prostitute for a week for $10 million. And that begs for a wisecrack there, but I'm going to pass. And 7% said they'd be willing to murder a stranger. 7%. The next time you're in a room with 100 people, now listen to this. Next time you're in a room with 100 people, just know that seven of those people in that room would kill you even if they didn't know you. Does that make it more difficult to kill somebody if you know them? I guess it depends on if you like them or not. That's going to freak you out the next time you're in a room with 100 people, right? So if it's 50 people in the room, I guess 3.5 of them would be willing to kill you for $10 million. And so if we're in a room of, let's see, we're at 100, we're at 50, so in a room of 25 people, let's just leave it at that. In a room of 25 people, at least one of those people in that room, according to this survey, will be willing to turn your lights out for $10 million. Huh. Do you find any of that shocking? Surprisingly, I just feigned shock. I wasn't that shocked. Kind of about the murder part, but the other, not really. Now, maybe you're thinking you'd never do that. Don't be so quick. The survey showed that Christians were almost as likely as non-Christians to falsify their taxes, call in sick when they weren't really sick, cheat on their spouse, and tear down someone else's character to make themselves look better. Think about it. Have you done any of those things lately? If you have, read these words or listen to these words carefully and prayerfully. You should read it, Colossians 3:9 through 10. It says, "Don't lie to each other, for you have stripped off your old sinful nature and all of its wicked deeds. Put on your new nature and be renewed as you learn to know your Creator and become like Him." Now, when you read this, when you meditate on this, pay particular attention to the words, put on your new nature. Honesty is a garment. You got to put it on every day. You don't go out without your underwear or commando, right? Well, let's just say pants. You don't go out without your pants. Don't go out without honesty. Start modeling the truth, the whole truth, and nothing but the truth every single day, in every single thing, in every single way. So help me God. And honestly, see what I did? Honestly, you'll need His help. Because it takes fewer muscles, fewer facial, I'm making this up. It takes fewer facial muscles to say no than yes, to tell a lie or not. I made that part up. But you get my point. If we're going to truly be honest with each other, like the scripture says, we're going to need God's help. And if we're going to be honest with ourselves, wow, we're really going to need help, right? Because we lie to ourselves more often than we lie to other people. We're more dishonest with ourselves than we are with others. And that's a problem, because if you can't trust yourself, you can't trust anybody. And living a life with no trust is like living a life with no hope. It doesn't have to be that way. It begins with you. It begins with me. Start modeling the truth in everything we do and say. That's the whole truth and nothing but the truth. Help us, God. Think the truth, face the truth, love the truth, pursue the truth, walk in the truth. From today forward, you can make up your mind, you can draw a line in the sand and go, you know what? That's the old me putting on his new garment. God gave me a second chance. He told me I could take off the old garment and put on this new garment. I don't want to let him down. So this day forward, I'm going to think in truth, speak truth, face truth, love truth, pursue truth, and walk in truth. That's our good word for the day. And this has been The Truth About Trading. Hey, thanks for tuning in, guys. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any securities. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.